Have you ever had one of those amazing winning streaks in the market? You're feeling on top of the world, only to watch it all evaporate in a single frustrating day? Yeah, you're definitely not alone. Today, we're going to dive into exactly why that happens and, more importantly, how to stop it. It all comes down to finding a trading style that's a perfect fit for you. This isn't about picking the right stocks. It's about really understanding yourself.
This quote right here, this is everything. It's so easy to get hooked on the adrenaline rush of a big win, but the real pros, the ones who last, they know that the actual skill is in protecting what you've earned. That is the single biggest difference between a gambler and a professional trader. So what is it? Is there some magic indicator, a secret algorithm that nobody's telling you about? Nope, not even close. See, the secret isn't out there in the market. It's in you. It's about finding a trading style that just clicks with your own unique psychology, so you can execute it with discipline day in and day out without fighting yourself.
And this is the villain of our story today, the give it back phenomenon. You know how it goes. You have a great week, your confidence is soaring, and then bam! One small loss just throws you completely off your game. You get impulsive, you start revenge trading to try and win it back immediately, and before you know it, poof, all your hard-earned profits are gone. This is exactly why a personalized strategy is so critical. It's your defense against your own worst impulses.
Okay, so let's explore some of these styles. We're going to start with our first archetype, the patient hunter. I want you to picture a sniper lying in wait for hours, maybe even days, just waiting for that one perfect shot. This trader isn't looking for constant action. They're waiting for the big one. The patient hunter is a classic trend trader. Their entire game is built on one simple idea. Find a major market direction, a big uptrend, or a powerful downtrend, and ride that wave for as long as humanly possible. They're not trying to catch little ripples in the pond. They're out there trying to ride tsunamis.
Now, take a look at these numbers because they're kind of counterintuitive. That win rate, it's surprisingly low, often less than 50%. So you might be asking, how in the world do they make money? Well, the secret is that reward-to-risk ratio. For every single dollar they put on the line, they're aiming to make back $2, $3, even $5 or more. That means one single home run can completely wipe out a whole string of small losses. But wow, does it take a special kind of patience to stick with that.
So what's in their toolkit? Pretty straightforward stuff, actually. They're using moving averages to get a super clear picture of the trend's direction, and tools like the ADX to measure just how strong that trend is. And crucially, they are always zooming out, looking at higher time frames to make sure they're not getting faked out by all the short-term noise.
All right, so if the hunter is a sniper, our next trader is the complete opposite. They're more like a boxer in the ring, constantly moving, jabbing, sticking and moving. Meet the nimble opportunist.
The opportunist is a range trader. They absolutely thrive in markets that are just chopping sideways, going nowhere, bouncing between a clear floor, support, and a clear ceiling, resistance. Their core belief is something called mean reversion, which is just a fancy way of saying that prices tend to return to their average. So they buy low at the floor and sell high at the ceiling, over and over again.
And this just shows you a completely different psychological profile. Look at that win rate. It can get as high as 70%. This kind of trader gets that constant positive feedback of frequent small wins, which feels great. But there's a trade-off. Each win is pretty small. Their goal is to stack up a whole bunch of these little profits. The big danger? That one time the range finally breaks, if they're not disciplined, one big loss can wipe out dozens of those small wins.
The opportunist's toolkit is all about finding the edges of that range. They're using oscillators like the RSI and stochastics to tell them when the market is overbought near the top or oversold near the bottom. They love things like Bollinger Bands, which kind of create a visual roadmap of the action. And of course, they are absolute masters of identifying those key support and resistance levels.
Okay, so let's put them head to head. You've got the hunter on one side, playing the long game, looking for that one massive win. And on the other, you've got the opportunist, focused on consistent, short-term profits. The most important thing to get here is that neither of these is better than the other. The best approach is simply the one that feels right for your personality.
All right, on to our final archetype. This one lives for that single moment of explosion, that transition from dead calm to pure chaos. This is the decisive sprinter.
The sprinter is a breakout trader. They spend their time watching for when the market is coiling up, getting tighter and tighter in a consolidation pattern, and they place their bet on the exact moment it breaks free. They're trying to get in on day one of what could become a massive new trend.
Now, the sprinter lives in a really high-stakes world. Their stats are kind of a mix of the other two archetypes. But just look at that psychology line. mentally resilient to frequent false breakouts. This is everything. The market will constantly try to trick them, breaking out of a level only to snap right back inside. You have got to have seriously thick skin to be a breakout trader, because you have to be okay with taking a lot of small paper cuts for that one explosive winner.
So their toolkit is all about identifying these moments where the market is like a coiled spring. They're masters of chart patterns, things like triangles, flags, rectangles, and crucially, they are always watching volume. A breakout that happens with a huge surge in volume, that's their confirmation that the big money is behind the move, giving them the confidence they need to jump in.
Okay, so you've looked at the archetypes, you've picked one that feels right. You're done, right? Not even close. That's only half the battle. A brilliant entry means absolutely nothing if you don't know when to get out. Mastering your exit strategy is how you actually get paid.
We can boil this whole complex topic down into a really simple 3-step plan. First, you've got to choose your philosophy. Are you aiming for a fixed, predetermined price target, or are you going to use a dynamic trailing stop that lets the market's momentum decide your exit? Step 2, you absolutely have to define your specific rules before you even get into the trade. No winging it. For example, a rule could be, I will sell when the price hits the 200-day moving average. Write it down. And finally, step 3. This is the hardest part for everyone. Stick to the plan. That means you execute your exit without letting fear or greed cloud your judgment.
Now let's really dig into those two philosophies, because your choice here has to match your archetype. Fixed targets, over on the left, are perfect for our nimble opportunists and our sprinters. They give you a clean, objective exit. You set the sell order, you walk away. It totally removes the emotional roller coaster of watching a winning trade fluctuate. The downside? Well, you might sell right before a move goes absolutely parabolic. Then, on the right, you've got trailing stops. This is the lifeblood of the patient hunter. This method lets you ride a powerful trend for all it's worth. But, and this is a big but, you will never sell at the absolute top. The trend has to reverse for your stop to get hit, which means you always give back a chunk of profit from the peak. You have to be okay with that psychologically.
So we've covered the archetypes, the psychology, and the critical importance of a disciplined exit. Let's bring this all home and talk about what finding your edge really truly means.
Here's what this all boils down to. There is no magic formula. There is no single best strategy that works for everyone. The best system in the world is the one that you can actually stick with through thick and thin. Looking at these takeaways, the theme is pretty clear, right? It's all about self-awareness. It's about finding a style that feels natural so you can execute it without hesitation. In the end, trading is really a game of self-mastery, not a game of market prediction.
And that leaves us with one final and really essential question. Now that you know the archetypes, which one are you? Are you the patient hunter, waiting for that one big score? Are you the nimble opportunist, stacking up those consistent small wins? Or are you the decisive sprinter, thriving on that explosive, heart-pounding action? The answer to that question, that's your first real step toward building a trading career that lasts.